Speaking to you today, I've actually had two trades that have actually hit my stop loss because of Trump tweeting one thing or the other, or Trump coming up from nowhere to give out a speech, and it definitely affects the market. Well, guys, FN-FOREX right here. So the market has been crazy lately. At the end of 2024, Trump won the US presidential election. Every trader was happy that okay, volatility is going to come in the market, like what we saw before the end of 2020. But this time the case was different. When Trump went into office in January, the beginning of this year, since then we have been seeing crazy volatility. If this Trump era has not affected your strategy, therefore your strategy is very powerful. Now, for most strategies and for most traders I know have been affected by Trump's era. Now, what are some of the causes of this? Trump has brought in a lot of tariffs on different major powers or different major economics that has affected the market in one way or the other. There's a lot of instability, and investors are shifting to the traditional safe havens like gold. If you look at gold has been buying, right? But now this video is for you to know how to approach the market at this point in time. Speaking to you today, I've actually had two trades that have actually hit my stop loss because of Trump tweeting one thing or the other, or Trump coming up from nowhere to give out a speech, and it definitely affects the market. So how do we approach the market during this time of uncertainty? How do we approach the market during this time of crazy volatilities in the market? The strategy might still work, but I bet with you, most of the time you see how okay, the market has gone, hit the stop loss, so it goes your direction, right? So we're going to be looking at some key points on how to approach the market during this particular point. The first one is understanding the source of the volatility. First of all, you need to be informed. You need to be aware of the fact that okay, where is this volatility coming from? You don't just ignore the fact that okay, volatility came in, probably maybe it has hit my stop loss, probably maybe it has changed the trend, but now you should be aware of the source of the volatility. It might be Trump just tweeting. It's very important. If you are not on Twitter or on X, right, it's high time you go to X, and if there's only one person you should follow, then you should follow Trump to make sure that you stay updated with his tweets, because just his tweet alone is going to affect the market, right, depending on what he is saying. Then we also have a lot of fundamental events. We also have a lot of speeches that are coming up. Tomorrow you might go to your fundamental calendar today, or maybe tomorrow morning, you see that Trump has a speech maybe at 1:30. Is it a usual news event or usual fundamental event we usually have? No, right? It's just coming up. So you need to stay informed. Once you are informed, you know that okay, there's a news event coming up at this time, or Trump he has a speech at this time. Then with that now, you're able to avoid trading during that particular time, right? Or if you have an ideology of what the speech might be, right, you know how it might affect the market. You have an ideology of okay, what has Trump tweeted within the last minute? You know how it will affect the market, be it positive or negative. If it's a fundamental aspect that is probably positive to the US, you know that okay, it might give more strength for USD, right? If you know that okay, it's a news event that maybe it is going to affect a particular pair, you know how to approach it. Use Forex Factory or investing.com or any other news app, right, to stay informed. The second point, we have trade only high probability setups during periods of volatility, during periods of uncertainty. It is preferable you go with the high probability setups, right? The setups that follows your trading plan, the setups that align with your strategy. That is very important during this particular time. There are times where we could just play some trades when that entry is not yet really confirmed. You just place the trade. The market is very slow. The market takes its time. At the end of the day, the market might just be following the trend, and you hit your take profit, or the trade goes your way. But during this period of uncertainty, during this period of high volatility, you need to make sure that you follow high probability setup. Use your top-down analysis, wait for price to react or conform to your entries before you place your trade. The third factor, reduce your lot size and use wide stops. This particular point is very important. Now, volatility, we are not talking about that volatility that will give you that, that good push to the upside or that good push to the downside. We are talking about that volatility that, it whips and goes up, whips and comes down, right? you need to reduce your lot size and increase your stop loss so as to avoid being weak out. So during this period of volatility, what you need to apply is, proper risk management. We're talking about applying proper risk management. Give yourself some gap, give your stop loss breathing space so that the market can be very volatile the way you want to be. It's not going to affect your stop loss. So by increasing your stop loss, you know that you have to reduce your lot size. You pay attention to your position sizing calculator, whereby you know that, okay, if we used to have maybe 20 pips stop loss, maybe now we should give another allowance. Maybe we should give our stop loss maybe say 25 pips or 30 pips. If you calculate your stop loss is exactly 25 pips. Maybe you give an allowance for, let's say, 30 pips. That is you increasing your stop loss for safety. Now, once you increase your stop loss for safety, there's another thing you need to do to balance it up. Your lot size, right? You will not increase your stop loss and still use the same lot size. So that's where the dynamic position sizing comes in. If you have no ideology about the dynamic position sizing, maybe you should check a video I have on risk management. I think under free lessons, I have a video there on risk management. It's going to guide you through how to navigate the dynamic position sizing. So you should be able to increase your stop loss, right? But maintaining what you want to risk. Talking about what you are risking. At this time, too much volatility. Maybe if you're risking 5% per trade, maybe you can reduce it to risking maybe 2% per trade. If you're on a prop firm, normally on a prop firm, you should not risk more than 1%. Now, during this period of volatility, you can reduce that 1% to 0.5%. That is to avoid you getting too many losses, because with this volatility, I bet you can get even 3 losses in a day. Very easy, within the shortest period of time, right? So reduce your lot size and use wide stop loss. In conclusion, use proper risk management. The fourth point, avoid trading during major news release. Now, during major news release, it's simple. Do you understand the news? First of all, you need to understand the news. If you don't understand the news, don't trade the news, right? If you understand the news and you know the possible impact that news is going to bring in, then you can leverage on that, right? That's another topic on its own, which is completely fundamentals. But avoid trading during major news release if you don't understand this news release, right? But if you understand the news release, you can always make use of it. Now, let's say a news release is coming up. When you have a trade, what do? If that trade is in profit already, you can simply remove your stop loss to your entry or secure some profit, right? Because two things involved. When news comes in, it's going to come in with volatility. When the news comes in with volatility, it's either going to favor you or go back against you, right? There are times you might just consolidate both ways. You get. So to leverage on that, if you are already in profit on your trade when the news is coming, make sure you secure yourself. Maybe remove yourself from any risks, or maybe even securing some profit. Now, if the news is coming where you don't have a trade yet, and probably that news is going to affect a particular currency pair which you are trading, then what you have to do is wait for the volatility of the news to come in. When the volatility of the news come in and pass, then you can now analyze the market properly using your strategy, and you follow your trading plan and you trade normally, right? So two things involved. You can either leverage on the news, right? If you're already in a trade, by removing yourself from your risks, the amount you're risking to your entry, or secure some profit, or you can simply avoid the news. The fifth point, diversify your pairs. I trade gold most often. Now, with the way the volatility is affecting gold, or with the way the volatility is affecting the major currency pairs, everything that has to do with Trump is circulated around the US, right? So the major currency pairs kind of are the major pairs that really get affected by, the volatility and Trump tweeting here and there, and the tariffs up and down. So at times, what you can do is that you diversify. You go to some minor currency pairs. You trade maybe AUD, maybe CAD JPY, you give it a try. Meanwhile, you are not aligning your pairs which you are trading. You are trying to study to see how you can adapt to the change. By studying to see how you can adapt to the change with your normal pair you usually trade, you can diversify and start looking at other pairs. The sixth point, think long term. Now, this volatility, with time, the market is going to be stable. That's what I believe. Now, the tariff and the policies, are still coming in here and there. With time, when the policies are going to be stable, the market is definitely going to be stable. So even if you have, some losing streaks this period, you need to think long term. That is how trading is. New things will always come, affect the market, but if you think long term, you're going to be thinking of, how to adapt to the changes, right? So when you think long term, it's going to help you a long way. So those are the 6 points I have for you if you are actually facing difficulties with, the volatility that's happening in the market. For one, I am suffering with that particularly, right? So this point I'm giving you is basically points that, I'm doing my research, trying to study to see how I can get better, and I come up with this point and I thought I should share them with you. So let's keep pushing, and always having in mind that as a trader, you are always learning. Once you make those losses, ask yourself this question: what did I do wrong? What is the lesson I am getting from this losing trade, right? When you hit those losses, go back and look at what actually happened. Did Trump tweet something? Was there a fundamental event? What happened? What is causing volatility in the market? At times you see unnecessary volatility in the market, right? Always make sure that you go back, you look to make sure that you see that, okay, what is happening in the market? Trump is back, but your trading doesn't have to suffer. Use your strategy, stay positive, be patient and wait for your confirmation entries, and let's keep killing the market. So if you are just watching this video for the first time, if you are just coming in contact with our YouTube channel for the first time, please don't forget to like and subscribe to our YouTube videos, as we are going to be sharing more trading information and psychology tips. And if you're interested in joining our course, if you're interested in purchasing our Forex course, we have a full Forex course from the basics to you're able to trade on your own, which is going for just $100. Click the link down below to purchase the course. Click the link down below to join our Telegram, and click the link down below if you want to create your trading account. Peace out.